G'day folks. Well, there's been another excitement in the markets. The markets have taken a dump to the last couple of days, and today in particular, with the Nikkei feeling the brunt of it, and that's causing problems and headaches not only on the indices but also across some currencies, dealing with the Japanese yen. So first off, don't forget to hit that like and subscribe button, support us more on the Patreon page. If we go to the heat map, you can see there's a lot of red on the map there. So let's first off start with the bottom left there. So as you can see, the US market, the Japanese Nikkei, the GermanDax, and the NASDAQ have all showing predominantly weekly and daily bearish signals. The Nikkei itself is turned bearish on the monthly as well, with the other instruments showing neutral positioning. And also notice some of the commodities, they're also very bearish at the moment, and a few of the indices, especially the US Japanese, and I haven't got the Aussie Japanese on that one, but you can see there's a few other bearish and bullish movements across the various instruments. I just posted a video on the nat gas market, so go to that one for that reference. So first, starting with the S&P 500, it's turned bearish on the monthly, bearish on the weekly, and bearish on the daily. Even though the price looks like it's still rising, it's actually dropped quite significantly. And you can see that especially illustrated by the daily chart. Now on the daily chart, you can see there, I did draw there was a bearish divergence on the CCI, lower highs versus higher highs on the price. And then actually I drew a target there and actually hit that 23-38% target level. Now it could bounce from here, or it could actually fall further. And I've got a key support here at 49.26, so I'll just keep an eye on that and see how it goes. But at the moment, predominantly if you're trading on the intraday, we only take short trades based on the daily trend. So again, only taking short trades. This is the daily, this is the hourly. So you would only take short trades, and that's indicated by these red arrows up there. So you would have taken short trades from the 18th of July. So going to the 18th of July was back here, and that would have been your first entry back in this period of taking short entries based on the direction of the daily. Now, since then, we've had a couple of bullish diversions. It's bounced, hit those little targets. Now, we're not trading those divergences, we're just looking at a potential exit if you're going short in this case. Just be aware that the price may reverse, but in this case it hasn't. Now for this one, it actually rose quite significantly after that little divergence, and then it fell further, and you would have taken another trade from that point, and you'd still be in the trade today if you were trading this on the 1 hour time frame. Looking at the GermanDax, now that's done a similar sort of action to the S&P. It's broken into that moving average range on the monthly. It's broken bearish on the weekly and very strongly bearish on the daily, and you can see there. Now on the weekly, first off, I did have a Fibonacci range. It actually fell well below the 38%, and now it's approaching the 50% towards this moving average on the weekly price chart. But only taking short trades on if you're trading the daily, only taking short trades based on the weekly trend. On the daily time frame, you can see there, let me just get rid of the long arrows. You only take short trades, and you would have taken short trades from that point, and you'd still be in a trade today if you're trading it on the daily. So again, short trades only if you're trading on the intraday or the 1 hour time frame. So from around about the 1st of August, you would have taken a short entry at that point, and you possibly could have exited the trade when it entered into that moving average range and then re-entered it when it broke below. You can see there price is moving sideways, so that would have been a nice little trade to take. Or if you want to trade against the moving averages of the price chart, you'd still be in a trade today and it's still falling, and that would have been another entry there. Just when it broke below there, you'd still be in a trade on the DAX. So looking at the Japanese Nikkei, you can see there on the monthly it's bearish, on the weekly it's bearish, and on the daily it's well below the moving average range of the CCI. And we did have if I zoom out on the weekly first, we did have a bearish divergence here. I drew a target on the 23-38% level some time ago on this Fibonacci range. It's actually gone straight through that the last couple of days, and today more specifically it's broken below the 38%. It's currently resting on that 38% Fibonacci level. On the daily time frame, we had another bearish divergence here. Drew that target. There was one back here, but this was a more recent one. Easily penetrated that and fell well below the 61% of this Fibonacci range. So looking at the 1 hour time frame on the Nikkei, this is the daily, again taking short trades from the 17th of July, which is this period back here. You would have taken a little trade there, another little trade there, and these are all little short trades. And this more recent one, there's an entry there, and you'd still be in a trade today. Again, similar, you might want to take some profits when it hits that moving average range of the CCI, or if you're trading against the price chart, let it go, and you can see there it's making a bit of a rise now. Again, if you're trading that on the CCI, you would have taken a entry on that candle there and getting close to closing it out in the next hour or so. It looks like it's rising. So again, just take your choice if you want to use the CCI moving averages or the price chart moving averages. Lastly, looking at the NASDAQ. Now on the monthly, it's bearish. It's broken below the moving average range there. We did have a bearish divergence on the monthly as well, and that's actually coming close to hitting its target. It may well do so in the coming days, and that's between the 23-38% level of that range. On the weekly, we had another bearish divergence. You can see there, and zooming in, it's not far. Actually, no, this one's already hit the target there. That little bearish divergence there, it's already hit it. And the wider time frame, that's similar to the monthly target. And on the daily, that's already punched right through that daily bearish divergence. It's actually fallen right through that, and it's coming close to 100% retracement of that range there. So if I zoom out on the daily, we did have a support there at 17,007, and it's not far off that major support. You'll notice also the daily CCI is still below its moving averages, no sign yet of a reversal, and that's probably our next level of support to look out for. Going to the 1 hour chart, again using the daily as a reference and only going short from the 12th of July. So going back to the 12th of July. So going back from this to this period, you would have taken short entries. Again, be careful of these bullish divergences as they occur. And more recently at the moment, you would have gone short there, maybe taking your profits somewhere in that area if it hits the CCI range. Or if you're still in a trade based on the price range, you're waiting for it to break. And again, it's coming close to that CCI range there. So if you got value out of the video, hit that like and subscribe button. Support us more on Patreon. Thanks for watching, and see you in a future video.